All right. Good morning, guys. Today is Tuesday, May 13th. Just looking at what setups we have right now based off of where price is at. Put this up here. Mm. Okay, so we have a retest of the EMA, the 4-hour EMA here. Uh, let's see. All right. So for the EMA retest, we have a retest of the 4-hour EMA, which is down here. So here we just need to mark up 10 points away from this. So the EMA, we'll just, let me see, 156, 146, 156 point, I know it keeps moving, 155, so 145.3, somewhere there. So it is in an area of overlap, but for the rejection scalps, we just care that there is that green or red zone within the entry itself, because for the scalps, we don't care about overlap areas because we are going for such a small move. And for this particular one, like the other thing I want to test going forward, I want to do going forward is entering exactly at the 10 point area. So see how we normally do. We normally wait for price to go 10 points past an EMA or 10 points past an SAR. So if I share this real quick, actually, wait. Um, If I share this screen real quick, I just did some back testing on it for the May results so far. So the idea is normally I wait for price to reach the 10-point threshold and then I enter on the 5-second when there's a change of structure. But what I noticed is definitely the 10-point threshold gives you a much better entry. Only issue with it is that you normally do not wait for confirmation. So what that might lead to is, automatically being stopped out, especially if price keeps going in that direction, compared to somebody who waited on the 5-second time frame and waited for a change of structure, which is what I do. But for the May results so far, the wins that I've had and the losses, or mostly the wins, because that ties into the gross and net profit, etc. So just by waiting for a 5-second confirmation, I've had 8 wins, 1 loss. And this loss here is tied to what the other strategy would have done, like waiting for the 10 or entering at the 10 point. But ideally for the month of May, you can see for the 8 wins, that's 16,000. But for entering at the 10 point, in order to cover for the days that you will get manipulated, or in order to cover for the days where you'll enter at the 10 point and automatically go to stop loss because you're not waiting for a uh, entry on the 5-second, the change of structure, When you enter the 10 point, you go ahead and go for, and hopefully we can see that today. So I have an account for the 10 point, and then I have my main account, which just goes for the regular entering at the 5-second time frame. So the idea is if this profitability or if the entering at the 10 point exactly goes well, then I'll just switch to entering at the 10 point itself. So the idea with the 10 point entry is that you want to go for a 1:2 risk to reward. So if we do the math here, we had May 8 wins, 1 loss. So that's 8 times 2, 16,000, less 2,000. That's 14,000 just for the SAR and rejection scalps, right? Entering on the 5-second time frame. But if I had the other entry is what was the middle one? The middle one is let me see. What was the okay. Now there are instances where the 10-second, oh, I'm sorry, the 10-point entry exactly is going to lose, but the 5-second entry, if you'd have waited for the 5-second confirmation, you'd have won. So that's an example here. Like on this day, May 7th, entering on the 10 point would have lost the trade. But then if we waited to enter on the 5-second confirmation, would have would have won the trade. I think that's why I have this two in the middle here. But I need to go back and confirm what I have in the middle there. But the very first one is waiting for the 5-second confirmation. Now, for the 1:2, entering on the 10 point and going for a 1:2, ideally, like for me, which my main account is a 200K account, 1:2 would give me like a 4,000 profit whenever that hits. So most of the days where the 5-second entry was hitting, the 10-point entry was hitting as well. But on this particular day, where the 5-second entry hit, the 10-point entry lost. But you can see we have just one loss on the 10-point entry and one loss on the 5-second entry. It doesn't mean that it's going to be that overall, but you know, just got to test it going forward. Now, if I had just taken the 10-second entry, I'm sorry, the 10-point entry exactly and not wait for the 5-second entry and gone for a 1:2, you can see there was same thing, 8 wins. So 8 times 4 is 32,000 less 2,000. So that's 30,000. So 30,000 net profit compared to 14,000 net profit. So you can see entering at the 10 point and going for a 1:2 risk to reward overall gives you more profit. And I'd also backtested all of these wins for April and March, etc. And so far, I think for the month of, and I'll go back to the chart so that we see if we get anything. But overall, beginning of March, no, when did I start trading? I think I started trading the SAR rejection scalps, I think in March or yeah, I think it's in beginning of March. But the idea is I had a net win of about $50,000 up to today or up to last week. But when I went for entering at the 10 point and going for a 1:2, that brought my net win about $100,000, $120,000. Because ideally it would be doubling what I already had. So, but at the very least about, let's even call it $80,000 year to date. So that's why I started an account for trying out the 10-point entry, and then I'll see how that goes. So even this month and into the next month, if that is more profitable, then I'll just switch to entering at the 10-point marker point and then going for a 1:2 risk to reward. So currently what I do, I go for, I enter on the 5-second time frame, and then I go for a 1:5 risk to reward, but I start trailing my stop loss at 1:1. So that helps me trail the stop loss if there's a big spike in price. So going forward, same thing for this other account. I'm still going for a 1:5, but my stop loss starts trailing at a 1:2. So, as soon as price hits 1:2, my stop is locked in into profit at the 1:2. So we'll see if we get an example of that today. We might get an example of it with, yeah. So we might get an example of it here with the order block rejection scalp. I might not keep doing the order block rejection scalp and then just focus on doing an order block rejection scalp and actually, you know what? I think that happened. No, we were in a red zone. Okay, so here's an example, right? So when we do the order block rejection scalp, which is similar to, the logic is the same with the SAR rejection scalp, with the EMA rejection scalp. The logic is only that you are waiting for price to go 10 points away from your EMA, 10 points away from your SAR, 10 points away from your order block. So an example of the 10 point, like how I would have done the order block entry here with the 10 point, you ask yourself, where is the order block in this instance? Now, for this one, we did not take it because if we turn on the zones, we are in a red zone, right? So the key thing is to always make sure that wherever it is that you're entering, if you're entering a sell, you make sure that you're in a red zone. If you're entering a buy, you make sure you're in a green zone. So if we were in a green zone here, we would have taken that. But here the question is always, you mark up your 10 point. So this is a order block, right? So 10 points would have been here. Because the idea is that you are anticipating price to reverse back in the direction of that SAR, that EMA, that order block. And then so this particular one, the 10 point would have been here, right? So with the example I've just given you guys, I would have entered this with 20 point stop loss. So stop loss for me, always 20 points. And here you go for 1:5, but since we are trailing the stop at a 1:2, if we're entering at the 10 point, that would have been the entry right there for the order block. Now you see this particular one, this one would have gotten stopped out, which is why the issue with order blocks is that normally you have a high and low of an order block, which is why I think I'll just end up using order blocks as confluences as opposed to like how we do it with the SAR rejection. No, with the SAR levels rejection. Because with the SAR levels rejection, we just care whether we have an order block around our entry as opposed to actually trading the order block itself. But you can see for this particular one, would have gotten stopped out and price would have gone back up. The other option is similar to what we do when we have a bunch of SARs or EMAs at the same level. We normally want to wait for the most optimal EMA or most optimal SAR, or in this case, most optimal order block. So you see down here, we had this hourly bullish high order block, and then we have this 30-minute bullish high order block, right? So which is the most optimal of the two? So you definitely have this one right here at the bottom, right? So this 30-minute one. So if you'd have done the same thing here, marked up your 10 point, and then you can see exactly right there. So now this particular one would have won. Now, personally, I always trade, right? I just trade however many there are. One thing you can do is just reduce your risk. So for this one, if you're going for a 1:2, yes, would have lost the first order block trade, but then this second one, it would have gone straight into profit for a 1:2, and actually you'd have been net positive. But again, I think I will drop the order block rejection scalp because it might just end up in a lot of break evens over time. So, but anyway, let's see if we get one in the live environment. Currently, the only issue is that you can see we turn on the zones, we're in a red zone. So unless price gets to this 4-hour EMA, which is where even that one, we still have some red. So we need price to get somewhere in this green zone right here. So at this point, mostly we have sell momentum because you can see prices below the hourly EMA one, the 30-minute EMA one. So if this 15-minute candle closes, it will close. We will have not a 30-minute, we will have if this 15-minute candle closes, we will have a 15-minute EMA one entry. So we will have a possible sell entry here for the 15-minute EMA, but we need to wait for 12 minutes. So going forward, I'll be taking 2 trades of the same entry. So one trade I'll be taking it at the 10 point, and the other one I'll be taking it with the regular 5-second entry that I normally use, that's right here. So going forward, I'll be taking two trades with the same entry, but on two different accounts because I want to get statistics of the 1:2 risk to reward at the 10 point entry. So, and the other thing that I do, so you can see here, we're still rejecting at order blocks. And you can see again, right? The 10-point marker is always critical. And I've noticed this back to back, which is why the 10-point marker is my threshold. So you can see price got to the 10 point and immediately reverse back up. The only thing I don't do is that when I'm trading an order block, I only trade the first touch of the order block after market open because the morning sessions that I trade between 9:30 and 11 a.m., right? So here, this order block had already been touched at 9:30 at market open. So now that it's being retested again, I'm not interested in trading that because we saw that one trade would have ended up in a loss. The other one at the bottom here would have ended up in a win. So I'm not interested in taking a trade if the order block has already been retested during my trading session. Same thing, my afternoon trading session, 1:30 p.m. to 3 p.m. I'm only interested in the first touch of the order block within that 1:30 to 3 p.m. If at 1:30 there's a test and I'm not in that trade, or there was like today where we were in a red zone, so we wouldn't have taken that trade, then if it comes back there later on before 3 p.m., again, I'm not taking it. So normally you want to take the first touch of the retest. Same thing with the EMA, same thing with the SARs that we do here, same thing with the EMAs, which is why with this EMA rejection scalp or with this EMA rejection indicator, I have either the check mark at the end of each EMA or I have the X at the end of it. So the check mark tells me that the hourly EMA one, the 30-minute EMA one, and the 15-minute EMA one have already been retested. So I'm actually not even looking at these EMAs right here to trade them. The only EMA is this 4-hour one that I'm looking to trade because we can see it has a X at the end. And if we go to the 4-hour time frame, you'll see that after price closed up, that 4-hour EMA has not been retested. This test right here is just because the EMA is a slow moving EMA, and eventually like it just caught up to the wick of that candle. But when this candle was running, the 4-hour EMA was nowhere near that candle. So the idea is that if you go to each of these corresponding timeframes, the EMAs won't or will be rejected. And also the red means that price is below that EMA or the last candle closed below that EMA. And the green means that the last candle closed above. So for example, right now, since we're on the 15-minute time frame, if we just do a visual test of that, of the 15 EMA, you can see that the 15 EMA one is green and it has a check mark, right? So if we look at the 15-minute time frame for now, we ask ourselves, which was the last candle to close above or below the EMA? It was this particular candle here, this green candle here. So that tells us why this color is green. And then we ask ourselves also, why is there a check mark at the end of 15-minute EMA one? Because we can see since that 15-minute candle closed above the 15-minute EMA one, we've had multiple retests of that EMA. Now, in the next 7 or 8 minutes, if this current 15-minute candle closes below this 15-minute EMA one, this 15-minute EMA one label will turn to red because it will tell us that this candle closed below, and then we will have an X next to it because it will be the first candle closure below the EMA. That is if it happens. And that's why I'm looking to take a sell on US 30 here if that does happen. But if this current 15-minute candle closes above this 15-minute EMA one, right? This label won't even change at all. So there won't be anything to trade. So right now, the only thing that will probably be looking to trade is this 4-hour EMA one that hasn't been retested. Or if we do get this 15-minute EMA one. And yeah, so last week this pretty much looks like the price action from last week. So last week we really, Monday we didn't, I think, yeah, and last week we had pretty much a live session every single day other than Friday. We took a loss on Tuesday. We didn't have a trade on Wednesday. Last week was just a lot of consolidation. Thursday, we had one win, one loss. Friday, we did not have a live session, and Friday is when I literally had two back-to-back two back-to-back trades. So two back-to-back wins on Friday. So it just looks like sometimes the days we don't have live sessions are the days I find nice trades. So hopefully we do get some going forward. But I'm definitely looking forward to testing out, especially the 10-point rejection marker. So for right now, all we can do is wait. Hopefully we do get something. If we do not, then maybe the rest of the week. And let me see if we will have. Yeah, so this week we should be able to have live sessions every day of the week if I don't get busy and caught up with other things. So let's just see if we get anything. So for the order block, so unless price comes up to, based off of where price is at right now, the only order block entry I can take is if price comes here to this weekly, no, actually to this hourly bullish low because we haven't tested it, or price goes up to this 30-minute bearish high and low, which we haven't tested. But if price keeps going into this range, then there really isn't nothing. So I think we will get this 15-minute entry. So 5 more minutes, and then we'll get this 15-minute entry. So for this 15-minute entry, I will just mark this up. So if you guys want to take the 10-point entries or the 10-point, yeah, entry when I do, feel free. But the only one I have a lot of statistics for is the waiting for the 5-second entry. So remember when we get confirmations and I always come to this 5-second chart. So this is the one I have confirmation for. The 10-point entry, we're not waiting for confirmation, which is definitely risky. But that's why we are going for, or that's why I'm going for a 1:2 risk to reward in order to compensate for the times when I'll automatically get stopped out on entry. So we'll just wait for this 5 minutes to end, and then we can possibly take this 15-minute sell that's coming up here. All right, so uh 1.5 more minutes. So given this push up, I'm not sure we are going to close below this 15-minute EMA, but if we do, it might happen so fast. Let me do this. No, this is rejection. 10 points is 248. So if this does close below, price has to come back and reach 258.1, which is somewhere here. Oh, also wait, there is an hourly. Because if this closes, we will have hourly. Yes, if we close above the hourly, we might actually have a buy here as well. On the hourly time frame, uh, on the hourly time frame, yeah, that closed above, but we already pushed up. Let's see. There is a buy on the hourly time frame because we did close above the hourly EMA one. So, and we have a green zone here on the EMA. I just need to see what part it is in. 269. Okay. Yes, yes, yes. So I will try out which account is this? Give me one moment. That happened so fast. Okay. So 259-ish. 259. Okay. If we get a green X here, I'll be taking it with my regular, and that's EMA rejection. So if we get a green X, because we did close above the hourly EMA one, and then we did get the 10-point marker. So I'm in the 10 point right here. So the 10 point I should have entered at 59 here, but I entered somewhere here. But we did get a close above the, we did get a close above EMA one. So I'm waiting for a green X to enter like my regular trade, right? So I'm already in the other account on a buy, that is. So I'm waiting for the 5-second entry to enter on my main account. But we did get a close above the 9 EMA. And I want to see, now I'm waiting for the entry on the 5 EMA. I'm sorry, on the 5-second time frame itself. So I just need that crossover. I need that green X. So you see the green X, if this candle, it's a little hard to see, but not yet. So what I'm looking for here is 200. And this is right. So for example, right here, for me so I'm already in the trade at the 10-point marker, but you can see the kind of the downside of not waiting for that confirmation is that if you don't wait for the 5 seconds, sometimes price can keep going against you. But if you wait for that 5 second, you can see right now on the 5-second time frame, I'm still not in the trade yet, right? So for here, what we're anticipating is that price will come back above that 9 EMA on the hourly time frame. So I'm not yet still on the trade. So we just need the that green X, and I think it's almost there. Waiting. There it is. So that's the entry right there, and we'll see how this one will go. All right. So I'm in the trade with both of my accounts. With the one that entered exactly on the 10-point area, and also so this is now this would be the official trade, the one that we are in right now, because we normally wait. It's best to wait for the confirmation on the 5 second. You don't have to, but if you enter on the 10-point itself, definitely go for a 1:2 risk to reward. So for the other account, so actually both my entries are pretty much around the same area. So we'll see how this trades go. But the anticipation here is that the 9 EMA or EMA one on the hourly time frame will hold, and we will go back and attempt to push past it. So that's the whole idea behind the rejection scalps, right? Is that you're anticipating price will stay or will come back above your EMA, price will come back above your SAR, price will come back above your order block. That is the whole anticipation of the rejection scalps. So for this official one, we normally go for a 1:1. I normally start trailing my stop loss at 1:1. So I normally do like a 1:5 entry, but then I start trailing my stop loss at 1:1. For the other one, I'll start trailing it at a 1:2. All right. So this particular one here was for a buy, and we might get stopped out. So I got stopped out of that. I think I got stopped out in both. Yeah, so I got stopped out in both for that particular one. So it's all good. Was a tricky one. It happened so fast, but this was the entry right here on the 9 EMA. Price closed above that EMA one, which for me is the 9 EMA, and was anticipating price will come back up, but unfortunately here just got stopped out for this particular one. So got stopped out on both so it didn't. So this is one of those trades where it didn't matter whether I entered on the 10-point or on the 5 second time frame after confirmation. So for this particular one, see, entry was at 42,261. 42,261. It was this one. All right, and then all right, so we'll see if we get another one. But ideally, right now, price is pretty much in a big consolidation. I still think US 30 will push up. If you look at all these wicks right here, we just have a lot of wicks at the bottom. So I still think we'll push up on US 30, but we might just be stuck in some level of consolidation like we were last week. So again here, that's 30 minutes. Nothing there. Again, here for the 15-minute, if we still close below the 15-minute, there might be an entry on the 15-minute, but I really don't think we're going to close below because, again, you can see, right, US 30 is coming back up because all these wicks at the bottom, we just have a lot of wicks at the bottom, which is still why I think US 30 will push up to the upside. And right now you can see we are above the hourly EMA. We are above the 30-minute EMA, the 15-minute EMA, the 4-hour EMA. So we are pretty bullish for US 30. So I still think US 30 will come back up. And it's just one of those instances where some of these rejection scalps, like price will come take you out and then, go back in that direction. But you just gotta keep waiting and taking pretty much every entry that shows up. So for me, that's what I do. Like between 9:30 and 11, I take every single entry that shows up that's valid. Between 1:30 and 3 p.m., I take every single entry that shows up and that's valid. So that way I'm able to still maintain. And I think this had like 70%, 60 to 70% win rate, etc. So normally with the 60 to 70%, you normally expect for every 10 trades, you normally expect to lose like 3 trades and win 7. So overall, you still end up uh, having or being net positive. I was hoping we get a rejection, an SAR rejection, but I really don't see any that is valid right now. The only SAR rejection that's valid is if price comes back to the downside, because that's where we have this uh, that's where we have this weekly sell SAR. So unless price comes back down, all these rejection scalps that are above here have already been tested. So technically they are invalid. Let me take off those markups there. Yeah, all those each of these rejection scalp has been tested. So even if price gets above there, I wouldn't be looking to take any of them unless we print a new one. Um, zones. Triple. Yep. So anyway, so yeah, this one got taken out and then came back and would have gone to that level. Yeah, so you can see what I said about the wicks. Like this wicks, which is why I even liked that buy on US 30 because I saw this heavy wicks on the top. The other option is to put your stop loss below the wicks, but only issue with that is that it's no longer like a rejection scalp. So you would need like a wider TP and stop loss. So you'd need like a 50 point or 80 point TP and stop loss for your entry. But yeah, so this week's that's what I was hoping we get the push up right now that we are getting, but unfortunately we just came back down a little bit and then ended up going back up. So um, we'll just wait to see if there's another one. So the only other thing that's coming up is a order block rejection scalp. But this one is a little tricky because we have this push up for US 30 and we have here for the order block. So you can see what I meant about the order blocks, right? So we have 30-minute bearish high and low, 15-minute bearish high and low. So this would mean taking 4 different trades, especially if you're doing the 10-point marker. This would mean taking 4 different trades. So for this particular one, the most optimal trade for the order blocks, even for me, I'm now willing to take 4 different trades, especially if I'm entering on the 10-point marker. So here, if I'm entering for the 10-point marker, I'll mark 10 points here, and then I will do this. So this would be the most optimal order block entry. Now, again, order blocks, for the order block, I really don't have a lot of data on them. So even for me, this particular time, what is it? I am just forward testing them because I don't think I'll be trading the order block rejection scalp starting next month. So I'm just forward testing them now. So I don't recommend taking this as a trade, or as an official trade. Actually, we haven't been taking any of them as an official trade. So for this particular one, I'll just continue taking it as just for my statistics, just for the purpose of my statistics. So regardless if it wins or loses, I really don't care. It's just mostly for the statistics. So you can see this particular one, 331, 341. So 341 would be the entry. So let's just visually follow this one with the 10-point marker. So 341 would have been somewhere here, 10 points away from it. But for me, I'm waiting at the very, very top for this particular one. So this would be the 10-point marker for it. And then the 5-second entry would have been here for the 1:1. So those would have been the two of them. So if we had only 2 order blocks here, like the 30-minute bearish high and low, I could have went to trade this too. But since we have 4, at the very least, I think I would rather maybe start with this 15-minute one at the top here, because right here we have 30-minute bearish high, 30-minute bearish low, 15-minute bearish low, 15-minute bearish high. So you would have to enter 4 individual trades. So which for me is not worth it. So you can see this one, waiting for the 5-second confluence. This one would be in drawdown and almost being stopped out. The other one, entering at the 10-point marker exactly, would still be in profit, but coming back around entry. So, and also again here, a big red flag is this big wicks from the bottom, right? So we see that price rejected against the hourly EMA, the 15-minute EMA, the 30-minute. So, and then we have this long wicks at the bottom. So price might be coming back, pretty much back up here. So for me, the one that makes sense to take here, as much as it's just like taking it to see the stats of the order blocks, is this top one here, or maybe this particular one. And we also printed an hourly SAR rejection. So I will be taking this hourly SAR rejection. Okay, so 10 points on this is, shoot, this will happen so fast. 172, 182. So at 182, okay, it's 182, an entry there. So 182, then there's this top one here. So, okay, then so you can see both of them would have gotten taken out, the EMAs, right? So you can see that red flag there. So this particular one, we have an hourly SAR rejection right here. So I'm already in the 10-point entry, and it's about to hit a 1:1. And then we need to wait for the 5-second one, the 5-second confirmation. So we need that red X to close, and I will be taking that. So I'm in this one as well here. So this one, let's see, 20 point stop loss, 20 points TP, and then I'm in the other one that's at the, so I have one entry where I entered all the way up here at the 10 points. So that happens so fast. And then I have this particular one right here. And we'll see how this goes. So this, especially those 10-point ones, they're happening so fast. Like you just have to be so fast with them. But we'll see how either of them go. So for this other one that I entered here, it's already at a 1:1. I entered somewhere here, and then I'm going for a 1:2. Let's see. Okay. Yep. So those are my two trades right there. But the second one is the only official trade. So the other one, I'm in profit, three Gs. I'm almost at a 1:2, 4,000. Yep. So both of them just hit TP, and there you go. Or no, the first one hit TP. This second one is still running. Okay, 1:1. We are almost there. Yep. So full TP on that trade. So perfect. So this is what I wanted to show. And let me first think this through. This just happened so fast. Give me one moment. And I hope my trade copier was on. Let's see. Did I take? I hope it did. Yep, it took that trade. Okay, so let me go back over what just happened. It just happened so fast. Okay, so we'll take this off. Okay, so for this particular entry, what trade did I take? I took let me turn off the markups. Okay, so the big rejection scalp entry that I've been taking, and you can see that dip. The big rejection scalp that I love taking is SARs. Like literally, I love taking SAR entries because ideally SAR means stop and reverse, or can mean support and resistance, etc. So SAR levels tell you at what area price is likely to reverse from. So typically when price, and you can look at this even from the back, right, back testing, when price got to this 30-minute buy, and I think I'll turn off the buy and sells at the end of it because it's kind of confusing to some. But what it's telling you is that if an SAR level forms above where price currently is, what that is telling you is that if I get to that level, most likely I'm about to reverse back to where I came from. Same thing, if an SAR forms below a candle, below where price currently is, the idea you're getting from that is that when I get down there, I'm likely to reverse back up. That is the simplest explanation of an SAR I can give. Now, same with my statistics or even my trading statistics for this. I have like I think SAR, I have like 75% win rate, call it 70% win rate. With that win rate, what it's telling you is that 7 out of 10 times when price gets to that SAR level, it's not going to close above. It's going to manipulate like 10 points, upon my back testing and also forward testing. It's going to manipulate or go past that SAR. Sometimes it's going to touch that SAR and immediately reverse. What that tells us is that we're not interested in taking any trades where price has immediately reversed from that SAR. But 7 out of 10 times, price is going to go past that SAR by about 10 points for US30, $1 for gold. I don't trade gold SAR rejections anymore because gold is not as volatile unless there's heavy news or whatever. But it still works on gold. But for gold, I found that I was coming back to break even a lot. So I stopped trading gold with the SAR levels, rejection scalp. But it does still work. Maybe, right? Maybe somebody needs to look into it more than I do. I've always traded US30, so I prefer US30. Now, with the 10 points, so if you guys remember today, I went over this and I said, and I literally took a loss before this trade. But what did I talk about? When you see an SAR level or an EMA level or an order block level, and again, I think I'll stop trading order blocks, but you want to wait for price to reach. The beauty about SARs is that it's only one. Sometimes they'll form like three, and we've seen that on the live session. Like sometimes they'll form like 3 or 4 of them around the same level, And right, that's where we then have to either come back and reduce our risk, etc., or we enter at the most optimal one. But the beauty about SARs is that most times they will form by themselves. It's just one and none other is close by it. Same thing as EMAs. EMAs as well, most of the times they'll form by itself, because if you have a 30-minute EMA one, that is the only EMA one that can be there. It's not like a 30-minute order block where you have the high and low. A 30-minute EMA one is only that one. The only thing that can happen with the EMAs is that they form next to other high time frame or low time frame EMAs. Same thing here where you have hourly EMA one, 30-minute EMA one, and 15-minute EMA one at the same level. But with the indicator, this one I coded, you're only interested in EMAs that haven't been retested, right? Okay, so let's recap this hourly SAR buy that we took here. Both there's an official trade and both the other one that I'm testing for a 1:2. So the first trade that I took, here, when I saw this trade form, the first thing that I always do is turn on the zones. Are we in a red zone or green zone? We are in a red zone. Perfect. So here, and the other thing, and here's the other part where I like using order blocks as a confluence. If we had any bullish order block around this SAR rejection, I would not have taken it. Yesterday, unfortunately, I took an EMA rejection scalp, but there was a bullish order block that I hadn't seen, and I ended up losing the trade. But here we don't have a bullish order block. In any case, we have a bearish order block. So this is a triple confluence. This is a A+ setup, because if you guys remember, if I do these confluences again here on the side, and we look at what our confluences, and these were technically the confluences for SAR levels rejection, but the only difference with SAR levels rejection and SAR rejection scalp, the SAR levels rejection, you're going more into swing trading or intraday trading. When the rejection scalp, you're just scalping, right? So remember, rejection or break of an SAR level, if buying, make sure you're in a red zone. If buying, make sure you're in a green zone. If selling, make sure you're in a red zone, etc. If you're buying, make sure there are no bearish order blocks around your entry. If you're selling, make sure there are no bullish order blocks around your entry. So how this equates to rejection scalps. Typically for me, 20 points stop loss, 20 points TP, but I normally go for a 1:5. So typically my stop loss starts trailing at a 1:1 for the 5-second confirmation entry, but the 10-point one, I'm going for a 1:2, so it starts trailing at a 1:2. So the key thing is to make sure if you're going for a 1:1 and you're selling, yes, you can still trade if there are bullish order blocks around it, but just make sure none of those bullish order blocks are in between your stop loss and take profit. That is all you need. If any order blocks fall into your stop loss and take profit, and they are opposite order blocks of what you're trading. Say if you're selling, you have bullish ones inside your stop loss to take profit. Do not trade that trade. If you're buying and you have bearish order blocks between your stop loss and take profit, do not take that trade. Okay, so this particular one here, this was an A+ setup. So how did I enter my first trade? My first trade is simple. I'm interested in knowing 10 points. What is 10 points above? So the SAR printed at 42,372. So 42,382 is where I want my entry to be. So somewhere, call it there, right? So that's exactly where I entered my first, and I'll show you guys. That's exactly where I entered my first trade, right there. Now, remember with this trade, you're not waiting for a confirmation. So easily, price could have kept, remember, 7 out of 10 times, price will do what it did today. It will get to the 10 point, pass your rejection level, and then come back into profit. 7 out of 10 times. But 3 out of those 10 times, you know what will happen? 3 out of those 10 times, price will keep going, and you will end up getting stopped out. Now, in order to take care of the 3 out of 10 times that this happens and also end up doubling, like I told you guys, between March, February, and May, like as of last week, the EMA and SAR rejection scalps netted me $50,000. If I had done the 10-point entry with the same entries, I would have been close to 100 Gs, if not more. Now, But to also allow for the times when you will be stopped out, if you're entering without confirmation and entering exactly at the 10 point, go for a 1:2 risk to reward. You will be golden. And most times, sometimes that trade will lose, but guess what? Even the person who was waiting for a 5-second confirmation, like the loss we just took before this, even the person who waited for a 5-second confirmation for the 9 EMA entry buy on US30 that we took, regardless whether you took it at the 10 point, regardless whether you waited for confirmation and change of structure at the 5-second time frame, both those trades got stopped out. So sometimes both of you are going to get stopped out, but the person with the 10 point going for a 1:2 will always have a better entry. And especially if you increase your R's, your risk to reward, overall, you will have more profit than the person who's waiting on the 5-second. Because, and I'll show you guys why that is. But anyway, so this was my first trade that I entered here at the 5-second. No, I'm sorry, at the 10-point marker. And then where was my second trade? So I want you guys to observe something. I want to, let's see. I don't know why my computer is laggy today. 382. I don't want this here. 382 entry was, the entry was there. And so far, there's no other entry here, so it's fine if we US30 rejection resistance 15. Give me nah, that's not an entry. US30 rejection resistance 30-minute. There is a sell entry on US30. Excuse me. Nah, I don't. Let me see something here. Put this. Let's see. There's a sell entry on US30, but anyway, so this was the first entry. Where was the second entry? The second entry was at 42,357. I want you guys to get that number, 42,357. So 42,357. Now, this was the official trade that we took, right? Because the official trade, I always wait for an entry for confirmation or change of structure on the 5 seconds. So 42,357. I want you guys to observe something here. I want you guys to observe something here. Now, and this particular one, 200, 20 points TP, 20 points stop loss. Okay. I want you guys to observe something here. Rejection scalp. Okay. Look at the distance between the two entries. The distance between the two entries is 25 points. That is the reason, like, I was thinking about this the whole time Friday. I was thinking about, I don't know what, I was watching some trading video, but, and then, you know, somehow I went back into thinking about rejection scalps. But even in the past, we have noticed that the person who enters at the 10 point, which, and these are the two entries here, the 10-point entry was here, the 5-second confirmation or entry was here. It was 25-point difference. So if you guys remember, I was talking about when I entered this official trade here, my first trade was already at a 1:2. Right? My first trade was already at a 1:2. So the reason you're going for a one, when I entered my second trade, my first trade was already at a 1:1. So the idea here is that these rejection scalps normally have a high win rate. So most of the times when this 5-second entry hits, the other one normally hits at the same time. Like literally, like for this particular trade, one account I made 4K, and maybe due to slippage, maybe I made a little bit more than that. I made 4,200. Well, this other account, I made about 1,700, which is maybe due to slippage. But the idea is when the 5-second confirmation one normally hits, the other one would have hit as well, but it would have hit for a higher risk to reward. Because for example, if I went for the 10-point entry, if I just went for a 1:1, over time, I don't think I would be as profitable. I think I would be at break even because remember, there are those times where price will zoom past your 10 point and go ahead and hit your stop loss immediately. So the reason that you're going for a 1:2, if you choose to take these trades at a 10-point rejection, is to cover for the amount of times price is going to go directly to your stop loss because you're not waiting for confirmation. And also to still keep in line with that, when the confirmation hits, the 5-second confirmation hits, your 10-point entry will have hit at a 1:2, and you end up, making up for the days that price will get you stopped out. So I'm actually happy this happened today because today our first loss of the day happened when price zoomed past the 10-point entry and went straight to the stop loss. And same thing, the 5-second entry was stopped out. But then when I'll show you because I'll take the screen grab of my profits for the account today, like for us, right? So today we are at break even. So we took a loss for the official trade, the first one we took earlier on, and then now we took the win. We took the win, this second win. But guess what? For my other account that took a 1:2 risk to reward, I am actually up for the day 2,000 bucks, which is about 1%. So that's the good thing with, just that 1:2 R. And normally if you have multiple R's, the beauty about multiple R's is that you don't even have to have a high win rate in order to be profitable. You can have like a 50, I think if you have a 50% win rate and you have a 1:2 R, I think overall you're net positive. Now you can imagine with like a 70% win rate and having a 1:2 R, that just ends up being even more profitable. But anyway, let me take a screen grab of this for my journal and then we'll just go over anything else that happens. So this one was the hourly one here. And also for this particular one, if we look at this official trade that we took, save this. The other thing that, as much as we normally wait for the confirmation, the other thing that I normally look at here is the distance of our entry relative to the rejection level that we entered, right? So there's a third way to enter this, but you have to be so fast. When price hits your 10-point threshold here, you set a pending order at the rejection level. But you have to be so fast with it because sometimes price hits your 10-point 10-point level, manipulation level, and comes back so heavily either down or up that you don't even have time to correlate your trading view unless you're entering on trading view, which is good. But yeah, I think futures traders, you can do that, but you have to be so quick with that. But what I've not been a fan of lately is even with the high win rate of the 5-second confirmation is the distance. So you can see here our SAR rejection level was at 32,372, but we got confirmation at 32,357. So that is a little bit, so that's what I've been trying to optimize or to get more from, is to ask myself, how can I utilize, how can I still be in the trade here around this area, but also adjust for the times that I'll get manipulated. But yeah, so this is why I started thinking about, why not enter the 10-point, but then maybe go for multiple R's. And I don't know if we'll get any other trade for the day, but we'll see. So we are 10:37. And let's see if we get anything else here. So based off of where price is at, there really isn't anything. We have a potential sell on US30. So I put an alert here for US30. We have a potential sell. For the SAR rejection levels, I haven't traded them in forever, but I know we had one on gold yesterday on the 4-hour. But yes, here we have an overlap. So for the SAR rejection levels, since they are swing or intraday trades, you care about overlap. So here, I wouldn't take this sell later on here because we have an overlap of supply and demand zones. For the rejection scalp, we don't care about overlaps because we're only going for 20 points TP, 20 points stop loss. For gold. Actually, there wasn't. There wasn't. I thought we had a SAR rejection level on gold. Yes, actually, yeah, we did somewhere here, but I think it would have gotten stopped out. No, it was for a buy. Yeah, this one you'd have needed like $50 take profit and stop loss, and you'd have still lost this trade. Yeah, you'd have needed a $50 take profit and stop loss. You'd have still lost this trade. So there's a daily. Oh, I think I'd seen this. Oh my God. There was a daily SAR levels rejection on gold. Oh wait, actually it did not retest the EMA. It came by so close, but there is a daily SAR rejection. We haven't retested that EMA. We haven't retested that EMA, but for this trade, you would need a you need a $125 TP and stop loss. I'm not willing to take that trade. You'd be in this trade for like a week or two, and that's if you don't end up getting stopped out. But it hasn't hit yet, or it hasn't triggered yet. You would wait to enter at 3,215, $3,215. Yeah. So I'll see if yeah, this one you'd need $125 TP and stop loss. SAR levels rejection. That's too heavy for me. So for me on gold maximum, especially if it's on the daily, I prefer a $50 TP and stop loss maximum. Yeah, so if only we hadn't gotten stopped out of this trade, we would have had two back-to-back wins today, but we just had to get tapped out of that first trade there. So let's see. So this is text here. And I'll stay on the live session for maybe 15 more minutes. And if you guys have any questions, feel free to let me know. But yeah, I think from next month I'll be going for the 10-point marker. Or I'll just be trading two separate accounts. But you have to be so fast. Like yeah, you literally have to be so fast and your eye on the trigger because you can get the confirmation and the 10-point almost at the same time. Um, so we'll see how both of those go. See text 1636. Save the photos. Full access. All right. So if I go and you can see how US 30 is still dipping. And there's definitely ways to maximize your multiple R's for this setups. But normally the rejection I see heavily like this is on the 15 minutes. So normally if you get a 15-minute SAR rejection after market open, price normally rejects back to the other side like pretty heavily for like 100 or so points. But if we look up here, so this is the first trade that we took. So this is my main account, right? So you can see had that first loss at $2,000. Second trade hit the 1:1 risk to reward. My trailing stop started trailing, but unfortunately got tagged back down a little bit. It should have been like a $2,000 win or so, but that's fine. So for the main account, just about minus 400 for the day. And then this is the account that I have for testing out the 10-point entry. So you can see same thing. First trade, that's the one that ended up getting stopped out, similar to this one on my main account. I waited for the 5 second for a confirmation on the 5 second time frame. For this one, I did not wait for a confirmation. I entered exactly on the 10-point marker, but both of them got stopped out. But then the second one went for, you can see my, right, I'm risking 1%. It's a 200K account. Went for 1:5 risk to reward, trailing stop at a 1:2. So exactly when I reached at 1:2, my stop loss went exactly at a 1:2 and started trailing up. And you can see going for a 1:2 put me back to break even and put me back in profit. So that's why I'm saying, like, overall, this particular one for entering at the 10-point and going for a 1:2, and you guys can see, like, the if we're just using this as a sample size, you can see you have a 1% advantage over time. So this is what I was talking about, like, with the regular one that I do here, having like a 50K, about 50K net income up to last week. But for this particular one, it would have been about 100K net income from beginning of the year. And keep in mind, I didn't even trade January because I was on vacation. So starting off February, March, up to end of last week would have been like 100K kind of move. So let's see if we get anything. So we are almost at 10:45. So at 10:45, two things will happen, or we might either get an SAR. No. Okay. So price closed below the 15-minute EMA one. So you can see that 15-minute EMA one has changed from green to red. And not only is it red, but it also has a red X next to it. So what that tells you is that price has closed, the last candle to close below the 15-minute time frame is a close below it, and we haven't retested the 15-minute EMA. So let's see what we want to do here. If I turn on the zones, we're in a red zone. Perfect. So if price comes above here, we do the same thing. So we should get an alert. So, but we would be looking to enter 10 points above this. Now, the issue with 10 points above or below an EMA is that EMAs are constantly moving. So you see, as price moves towards it, the EMA moves away. As price moves next to it, the EMA moves towards. So here, I should have an alert. I should, okay. 263. It's 273. Okay. So here at 273, that happens so fast. 273 at the 10 point is at 273. And then let's see. So I entered on my 10-point marker account. And then here we just have to wait for, I think I got slipped. Yeah. I got slipped in price or by price. So let's see here. And I'm waiting for confirmation on the 5-second time frame. So we can choose to enter. So if you want, you can follow this with me, but I'm in this trade on the 10-point account. I'm already up for the day with it, so that's fine. And then what I will do, we are waiting for the 5-second entry. So for the 5-second entry, we want that red X, that crossover sell. And again, you see the difference in where the entry, there it is. So there's the entry. So I'm in that one as well. So I'm in the 5-second one as well. So hopefully this one wins and we go back to being in profit for the day. So I'm in this trade. So this is the official trade. So anytime I enter on the 5-second, that's the official trade. So those are both of the trades running in profit. My first trade, so let's see, we just need a push up. So actually this first trade I got slipped pretty heavily. I think I entered maybe somewhere below here, but let's see if we can keep pushing for both trades. This is perfect. This is nice. This one is about to hit TP, the official one. Almost there. We just need a spike down. There it is. There we go. I need my trailing stop to be trailed. Okay, my trailing stop is trailed. There we go. Okay, I'm out of the trade. I think I made 1700. I got slipped out again on that trade. This other one is still running. This other one is still running. I think it's at a 1:2. this one right here. Now, the issue here, the other issue to even think about going forward is that the 1:2 trade hasn't hit yet, but the 1:1 trade has already hit. Now, here, price can easily come back up and go all the way to the stop loss of the 1:2. That's another thing to pay attention to. So maybe it's an instance of setting break even. I really stopped setting break even on my trades a while ago because I want to maximize the break evens to be like a 1:2. Anyway, I want the break evens to be some sort of profit. So maybe instead of break even going, setting your stop loss to, but anyway, setting your stop loss to maybe 1:1. So anybody who entered the 1:2 trade with me, this is one of those instances where we now need to think. The official trade already hit TP, right? So actually here now we are up for the day 0.75 instead of being at break even, up for the day 0.75, for the month back to break even. Oh, actually, never mind. They both hit TP. Yeah, but that's another thing to consider going forward for both trades. No, actually, for the 1:2 trade, is that sometimes, depending on slippage, is that price will come like your entry here, your entry at the 10 point might be slipped, because if you guys noticed, this rejection happened so far, and you can see the 15 EMA has turned back to have a check mark to show that the 15 EMA has been retested. But when price hit the 15 EMA, it went back, so it pushed up, but then went back down so fast, right? So sometimes, even for me, I don't think I got filled exactly at this level. I think I got filled somewhere down here. But the question, if you choose to enter the 10 point and go for a 1:2, I always ask yourself, especially, always also make sure you mark up where the official trade, where the 5-second trade would have been entered at, so that you kind of know, right, at what point would this other trade have hit TP, because your 1:1 trade can hit TP, but then you're still in the trade for your 1:2. So you have a big question there, because still you'd be in profit. So do you want to set break even? If you guys normally do break even or maybe take partials, go ahead and do that. Because for me, going forward, it's like I'll just be holding it. If it wants to come back and hit stop loss, I just let it be, knowing that I'm going for a 1:2 and it has a high win rate. I'm fine with that. But if I start taking, I can do it right now, because the account I'm using it right now is a test account, but I can do it right now because it's that way. But if I start doing it, maybe it's on a challenge, or maybe it's on, a real account, or I'm copying to real accounts, then maybe I want to maybe set my profit at 1:1 or something. But just keep in mind, if you start taking profit or partials before it hits a 1:2, your statistics overall will start coming back down. But anyway, so this was another nice win for the 15-minute EMA rejection. So entry was at 42,255. So this is, and that's a nice way to win the day. So imagine if we didn't take that first loss, we'd have had 3 back-to-back wins for the day. But it is what it is. So this one, 42,255, that's the entry here, 42,255 somewhere. And you can see how far away it is from the EMA. So that one, 220 point stop loss, 20 points TP. Pam, see that rejection scalp, and then I just take this for my journal. Yeah, I don't think there's no other entry we can take here, because it's almost 11. So 11 is my cutoff. So 11 is my cutoff for my morning trading session. And unless we get, the only trade you can take before the 15-minute, 30-minute intervals is the EMA one, because sometimes an EMA will get retested before you get the 15-minute. Like the SARs, when the SAR, actually, no, actually, my bad. Forget that. I just saw a fallacy in my explanation there. Yeah, so never mind. Forget I said anything. So let's see. So for the accounts that I just posted, one of them I'm up 6K and the other one I'm up 2K. So the 6K one is like the one I was talking about, the one testing the 1:2. See tags. So normally this is what I be like when I'm not on the, and normally when I'm on the live session, it's because I'm on another call. But normally when I'm on the live session, I'm sorry, normally when I'm not on the live session, like I still trade between 9:30 to 11 and 1:30 to 3. Like I'm literally doing what I just showed you guys right here, waiting for those confirmation. So even though I wasn't trading or I wasn't taking the 10-point rejection entries, like I would have still been up for the day today because I would have taken those 3 trades, um, and would have still been up for the day on, and that's on my main account. So it's literally, I don't do anything. I literally don't do anything different. It's ideally what I just did right here on the session. And today was actually a good session because sometimes on the live sessions we just have those choppy markets. And also I'll show you guys the importance of taking. So I know sometimes people have like a daily, or they have a daily trading goal. So for me, my daily trading goal is I want to take each and every valid setup that comes between. So for me, I only trade 3 hours a day. So 1.5 hours in the morning and 1.5 hours in the afternoon. But I'm looking to literally take every valid trade that comes in between those times. Now, the reason I do that is, so let's see. So, and we'll just do some math on that. Okay. Um, so if we go back here, so remember, so these were the trades that we took earlier, right? So I was down 400 on one account and I was up 200 on 2000 on the other account. Now, this is that last trade we took, right? Literally what we just took right here on the session. The 15-minute EMA one rejection brought back my main account to profit, 1200 for the day. So this, I don't like how it keeps getting slipped. I don't know. I don't know why, because it should be like 2000 on average. But the other one, look at it. So the other one got slipped as well. It should have been like 4K profit or something. But when it starts trailing and then, when price closes, you might have slippage. So you can see on this one account for 1:4, you can see that profit level. Now, here is why I take each and every trade. So let's assume that today, let's just assume we did not take the loss. Let's assume the first trade was a win. How much profit would I have for the day? It would have been what? 3. So let's assume the first trade we hit 4,000 profit for 1:2. So would have been $11,000 in 3 trades, or 12,000, 11,000, call it 11. Technically, it should be 4,000 times 3, but let's just say on average, $11,000. Okay. Now, let's assume that for this same account, because not every day will you have 2 back-to-back wins, 1 back-to-back win, 3 back-to-back wins. There's definitely this, but remember, the win rate is 70%. So what that means is that sometimes you will have 3 losses out of 10 trades. What that tells you is that these losses might be back-to-back. These losses might be one, they might be spread out, but let's assume worst case scenario. And the beauty about these trades is that they don't come up often, especially when I found out how to filter the EMA. Because when I started trading the EMA rejections, I was kind of overwhelmed and I was taking a lot of trades. So like today, if I hadn't coded in the indicator to know when EMA has been rejected, I would have literally taken all these 3 trades. So what that brings up is over trading, and sometimes you're exposed to a losing streak. But here, my indicator was able to pick and choose for me. It was telling me just go for the one, and that is it. Even though they are all next together, but it was able to pick and choose that for me. Now, I think so far I've only had like 2 back-to-back losses. So I know last week was a kind of shaky. So if we go back to my trades, and I can even go to my journal so that we see. But if I go to my trades, you can see this one day I had 2 back-to-back wins, but it was after one I'm sorry, two back-to-back losses, but it was after one win. So that kind of and ended up the day at break even. So I'm looking for a day I had like a lot of losing trades. This is a day I was trying to I was trying to set up my copy trader. So that's why I had like a lot of zero point 0.5 trades. But the 100 lot trades were only one, two, three, only one loss, two wins. So I really haven't had like a lot of back-to-back losses. So here, same thing, two back-to-back losses, but then two back-to-back wins. Same thing here. And you can see we are going all the way back in March. And I'll log into my journal and show you guys there. But before I do that, we'll see here that let's assume we had three back-to-back losses. So this is a 200K account. 3 times 2 is 6. 6,000. That is 3%. So you would still be well below the 5% daily drawdown, right? Okay, so even let's assume we took three back-to-back losses. That's 6,000, and then let's assume the next another day, which is not uncommon for me. Like I'll have two back-to-back wins, even three back-to-back. I don't think I've had three back-to-back wins. I've definitely had two back-to-back wins like on Friday. But let's assume you have like a day like today, you have maybe yesterday you have three back-to-back losses, but on a day like today, you have two wins, one loss. Yesterday you lost 6,000. Today, guess what? You got back the 6,000. And let's even assume like today we didn't get stopped out or stop hunted on the first trade. We have three back-to-back wins. You have $12,000 from the 6,000 you lost yesterday. You end up making back the 6,000 and being in profit 6,000 more. And keep in mind, I'm not done with the trading session yet. I'm still trading the afternoon session. And who knows, maybe in the afternoon session, I get a trade. Maybe I do not. Maybe I get two back-to-back wins. Maybe I get two back-to-back losses. I'll still be in profit for this account. If I get two back-to-back losses for the other account, I'll just be down like 1%. So you can see that's the importance of taking every single valid trade between the 9:30 a.m. to 11 a.m. and 1:30 p.m. to 3 p.m. It doesn't have to be those hours, but the key thing is that for the rejection scalps, you want to trade in periods of volatility. So you actually don't even have to do the afternoon session. But what I've noticed, the afternoon session is more directional. So price moves more directional in that time frame. So let me log into my journal real quick and go over and see if there's been any like, two back-to-back losses, etc. So this particular one, we want to do the EMA setups, SAR reject. Oh, I've been logged in. Filters, go to setups, rejection scalp, and we do 20, 2025. Okay. All right. So let's do it here. So if I share my journal right here, so for this journal, so this just tracks my main account pretty much, and different strategies over time. So you can see for this year, what I've done, the filter is SAR rejection scalp, EMA rejection scalp, order block rejection scalp, filter for the year 2025. So beginning, and again, I didn't trade in, let's see, when I started trading. I didn't trade in January because I was on vacation. I started trading this strategies pretty much last week of February. And you can see the net return is 41,238. I haven't uploaded today's trades. So this, including today's trades, this will be, I think I had a net win of 1,200, so 42,000. And you can see the beauty about this trade, again, green days all around, performance by weekday. So you can see SAR rejection scalp, my most profitable one, made 37,000. EMA rejection scalp made 7,600. The beauty with the EMA, and this one will actually go up today because it made Actually, we lost one on the hourly EMA rejection and won one. So actually, this will be about where it is. But the beauty with this one is that for the EMA rejection scalp, this $7,000 is only in a span of 2 weeks because I only started trading the EMA rejection scalp like 2 weeks ago. So in 2 weeks, it has made 20% of what the SAR rejection scalp has made in like 2 or 3 months. And this is why I introduced or I started doing the EMA rejection scalp, is that it literally gives you the same amount of profit monthly or weekly or equal amount of profit as the SAR rejection scalp. So let's assume in a month you're making, I think in last month, the EMA rejection scalp I had, and we can check, last month, the EMA rejection scalp, I had, what is it? March, April. April was a nice month. Last month, SCR rejection scalp had $27,000 just in 1 month. EMA rejection scalp had $6,000, right? So the goal, and I think I started trading it mid-month. So the goal is if the SCR rejection scalp can give you, don't even do 20,000, because for me, I risk 1% per trade, but let's just use a flat number like $10,000 a month, which is a lot. If the SCR rejection scalp gives you $10,000 a month, and you can see again the win rate across all three strategies, 70%. So this is what I was talking about. 7 out of 10 trades normally win. So if the SCR rejection scalp can give you 5,000, let's even call it $5,000 a month, $5,000 a month, the EMA rejection scalp should be able to give you $5,000 a month using the same entry, same logic, same everything. So I call them sister strategies. The order block rejection scalp, again, I think mostly, I don't like letting go of a strategy unless I've had like a month worth of returns or statistics for it. But you can see the order block rejection scalp. I've only taken one trade with it, and it's been a losing trade. Now, the issue with the, not issue, there are some trades that validate, like today, we had a trade validation. What is it? We had SAR levels rejection scalp validation next to an order block validation. So sometimes the order block validation will filter through and validate like at an SAR level, at an EMA level. So the statistics for order block rejection scalps sometimes might be skewed because when an SAR, sometimes an SAR rejection scalp will validate the same time an order block rejection scalp will validate. So sometimes it's like, oh, but I don't want to tie that one win to two different strategies. So going forward from next month, I'll just, be focusing on SAR rejection scalp, but then use the order block as a confluence. Remember when I was telling you guys, if you're entering a sell, make sure there's no order block, there's no bullish order block between your TP and stop loss. If you're entering a buy, make sure there's no bearish order block between your TP and stop loss. And we had a 30-minute EMA. So same thing here. We had a 30-minute EMA rejection scalp, but unfortunately that came up after 11 after 11. So you can see here, price retested the 30-minute EMA 253. I don't think it met the threshold. Let's see. Yeah, it didn't meet the 10-point threshold. The 30-minute EMA one was here, 254. So would have waited for price to go to 264. So this is one of the ones that price rejected exactly from the 30-minute EMA and, went back into like the direction would have wanted. But anyway, going back here, you can see every day of the week, our net has been winning, right? And you can see the equity growth curve. The other beautiful thing about this particular Edgewonk, the journal that I use, remember when I told you guys that going for the 10-point entry, and going for a 1:2 overall gives you more profit. So I'll show you guys how I was able to see that. So we can see this year alone, it's about, so if we take off this filter for April, 41,000 across all three accounts. So I know I'd said 50, so 41,000. So there's this thing right here called a strategy lab. And if you guys remember, when we were looking at the value of this account earlier, it was, I think the beginning of this year, it was where? 140, 120K or something. So right now we're at 177. But let's see. If we go to, there's this thing called a simulator. So if you go to the simulator, this allows you to simulate the same strategy you have across X amount of trades up to 1,000 trades, right? So here I'll run a simulation with my current statistics here for the SAR rejection, no, for the SAR, EMA, and order block rejection scalp. And if I start the simulation, it's telling me that from a starting balance of $200,000, the maximum account balance will be 430K. Yeah, 436,000. So a max gain of $236,000, minimum gain of 200. So at no point, if I continue trading the way I'm trading without changing anything, with literally what I've done right now till March, and I have a 200K account, over the next 500 trades, using the same win rate, I'll have 300 winners, 200 losers, right? But with a 70% win rate, right, I'm able to consistently do like what? I think it's get 100% return in the next 500 trades. If we change this, and if I keep, starting a new simulation and I keep going next, there's no point where price went below the 200 marker. Like it's all like linear to the upside. And that's why this is another reason why I stopped trading other strategies. I rarely trade the trend line and SAR rejection anymore. I don't trade the original strategies we used to trade, because I can maybe show you guys here and show you how some of these simulations kind of mess up, etc. So, but if I go for the next 1,000 trades here and I run simulation, you can see out of a 200K account, for the next 1,000 trades, I gain like about 200% account value, etc. Now, if I change this, if we do a little modification here and try to simulate the 10-point entry. So the 10-point entry, remember, it has ideally the same win rate as the 5-second confirmation entry, right? But instead of giving it a 70% win rate, let's give it a 60% win rate, right? Just to be, because it doesn't mean that every 5-second confirmation entry would have, for every 5-second confirmation entry, the 10-point would have won. It doesn't mean that. There's a time the 10-point would have lost, but the 5-second confirmation change of structure entry would have won. And vice versa. There's a time the 5-second would have lost and the other one would have lost as well. There's a time the 10-point would have won, but the 5-second confirmation would have lost. Now, but just to be fair, let's do a 60% win rate, average gain of, let's call it 4,000, and average loss of, let's call it 2,000, just for round numbers, because we're going for a 1:2 risk to reward, and starting simulation of $200,000. Wait. Oh, wait, I should have done a minus, so minus $2,000. That's better. Okay, so here, look at that. So for a starting balance of $200,000, if I enter my rejections at the 10-point and go for a 1:2, starting with a $200,000 account with a 60% win rate. I was even conservative, because keep in mind the win rate is 70%, but with a 60, even let's even do a 50% win rate. Or let's even go lower. Let's assume we're just terrible and sometimes we end up losing like a lot, right? For a 200K account, with a 40% win rate, which is almost half what I have right now, 40% win rate, account balance gain, 330,000. And if I keep running the simulation, you can still see it's still on the way up. It's still on the way up above 200,000. Okay, let's go back to the 60% win rate, which is still below the 70% that I have right now. And again, we'll get more statistics as I keep. This is why I'm taking the 10-point entry with my other account, so that we have these statistics, so that a month from now, 2 months from now, we can keep, right? We can simulate this with real statistics for trades I've taken. But right now, I'm not using KPI for my trades. I'm just using, right, I just inputted that manually to just reflect what was there. So you can see with a 60% one, 200K account would have gained, for the next 500 trades, would gain me $868,000. Again, 200K account, 500 trades, $868,000. I want that to sink in. This is like when I did this simulation on Friday, I was like, man, this is crazy. So total winners, again, you can see total winners of 311, total losers of about 210. The reason this one is higher is because of one thing. Remember, 1:2 risk to reward compared to the other one that's 1:1. So remember, for the waiting for change of structure on the 5-second time frame, for over 500 trades, it was giving me a return of about 100%. This one is giving a return of about close to 400%. Close to 400, 300%. But the idea is that whatever percentage you'll get on waiting for structure, you multiply that by 2. And if I keep running this simulation, you'll see the account gain doesn't change. 900 grand, 800 grand, 888. And the statistics, right? I'm sorry, the graph is still pointing to the upside. And this is only for 500 trades. So let's try that. Let's simulate for the next 1,000 trades. Look at that. And this is, the gain is in the millions. Again, this one you can scale back. It doesn't have to be, this is 60, and even 60% win rate, I've scaled it back. But again, I would like to redo this simulation for the next, I would like to do this simulation after a month or after 2 months of data, and it should still be this same ones right here. And let me go to the journal. So this is the journal that I'm tracking it on. So, and let me go through the process of uploading this for you guys right here so that maybe we can also do a simulation right here. So yesterday, this is the trade that I talked about. Yesterday, I entered this trade and I did not see the order block. So I ended up losing this particular trade. But let me take you guys through the process of this, of uploading this, and you should note that this one is going to change right here. So if we upload this, so this is the journal that I'm using to test out the entry at the 10 point and then going for a 1:2. So we should update. So this profit should go up like 200 and like about 5K. So there you go, 200. So account balance moved up. So what I normally do after this, I normally go into the journal, and then this particular one, the one we lost was a EMA rejection scalp. And I think it was EMA rejection scalp. We entered, it was an hourly rejection scalp. It was the 9 EMA. I don't attach screenshots on this one because I normally attach screenshots on my main journal because the trades are literally going to be the same. So if I ever wanted to see what trade it was, I would go back there. The second trade we entered, it was a SAR rejection scalp. So it was SAR rejection scalp. And then we entered it. It was an hourly one, hourly rejection scalp. And I think I need to, yeah. So for some reason, EdgeWonk doesn't, if you're trailing your stop, it's going to ask you for the original stop loss. So I think, what was it? It was a sell. So this should be 42,396.51. So that would have been the original stop loss. And then the last one we took was what? EMA rejection scalp for the 15-minute EMA. So this was a 15-minute. This one was EMA 1, which for me is the 9 EMA. And I think they're going to tell me the same thing. So 42,283.01. Okay. So currently, for this journal, you can see win rate 50% so far. So if we do a simulation with this one, even by using the 50% win rate, again, this particular one, this loss I shouldn't have taken yesterday. I shouldn't even have taken that trade. But anyway, if we do the simulation using our KPI right here, and we start simulation, it's still a little early, but you can see, right? Simulation is still nice, 50% win rate, or just using everything that we have right now from a 200K account. Over the next 500 trades is simulating that I'll probably gain about $400,000, between $300,000 and $400,000. if we keep simulating, right, the growth is still to the upside. The crazy thing with you don't want to see when you're simulating. So if I stop using my own trades here, and let's say I do 50% here, and then let's say I do average loss of minus, and this is just an example, right? So let's say average loss of minus, actually, no, let's do this. Average loss of 2,000, and let's say my gain is 2,000, right? Let's assume that. Let's assume I have a terrible win rate, right? I just want to show you guys what you don't want to see in a simulation. So of course, this is not my data, but this is what you don't want to see. When price is trending to the downside, you don't want to see that. And if we increase this by 40, there's something else I want to show. Maybe I'll be able to get that. Yeah, this one. So you're up in profit, back in drawdown, up in profit, back in drawdown. So it kind of, this shows you this is like a break-even trader or break-even strategy, right? So that's what you don't want to see. But again, if I go back, if I highlight this and go back to using KPI from my trades and start simulation, this is what you want to see to the upside. You don't want to see a lot of downside. And again, same thing. If we simulate to use the next 1,000 trades, look at that. Gain of about 900 Gs, between 700 Gs to 900 Gs. But anyway, so it's not too much data to use, but it's real data of trades that I've taken with a 50% win rate, 1:2 risk to reward. So this is the one that I'm literally looking forward to backtest. I'm sorry, to visualizing this simulator for you guys, maybe after a month. And from next month, I think I'll then switch to this strategy. It's either that or I will separate my accounts, have accounts going for the 1:2 and just have the accounts going for the one I do currently, which is still, it's widely profitable. I mean, 26,000 in a month is pretty high, or 40,000 in 2 or 3 months. But other than that, today's live session has been pretty long. There really isn't anything else. We are outside my trading window, so I wouldn't even be looking for anything. So unless you guys have any questions right now, feel free to send them in the Discord. Maybe at some point I'll start live streaming the afternoon session, but sometimes, actually today I'm surprised I've been talking this much. Sometimes I just don't like talking. So if I do live stream the afternoon session, it will probably just be me live streaming the account. I'm sorry, the trading view screen by itself, and then whenever I take a trade, maybe I put a statement on there that I'm taking the trade. But other than that, I will see you guys tomorrow. We should be able to have live sessions each and every day of this week, so hopefully we get more wins. But other than that, I will see you